I love what you say. Throw out the blueprint. Okay, brilliant. What's the replacement? What is the new blueprint that matters?
Hi, Tom. Good to see you. So I think that's ultimately what we're trying to figure out this year as investors, right? The market is pricing in today what's going to be a transition year for the economy from pandemic recovery to post-pandemic expansion. It's one where we have more optimism about growth, but we're also a bit more concerned about inflation. So it does mean a different withdrawal of liquidity than we had post-financial crisis. That's not the blueprint. Now we need to figure out what the new blueprint is. And I don't think investors have a clear read on that, and neither do policymakers. They're trying to figure that out real time, out loud, with several Fed speeches. And there's so many permutations we can come up with, right? In terms of rates and balance sheet, timing, pace, endpoint. So ultimately, we do think volatility is going to stay higher for longer. That means making big outsized bets on a tactical position is really difficult this year.
Gabriela, I know you speak 4, 5, 6, 8 languages. I mean, that's what you do in Pennsylvania, but the answer is you speak Greek. Let's go alpha beta right now. You say within investment in finance, alpha matters. What is alpha and why does it matter now?
So beta is just really the kind of return you can get just by being invested in the market. Alpha is the kind of excess return you can generate by focusing on the kinds of companies you invest in. And I think for the last 15 years or so, it's been a cycle of beta. It was all just about being invested and riding returns of indices, right? And you could have generated a 6.5% annualized returns just from a very simple 60-40 portfolio. But going forward, because the market has recovered already so quickly post-pandemic shock, we only project beta returns going forward of 4.3% annualized. So we got to work harder to generate the same returns as the last cycle. And that's where alpha comes in. You're starting to see a turn in hedge fund alpha. That could be a sign that really this is the dawn of alpha. There's a lot of valuation dispersion beneath the surface. There's a lot of value to add by focusing on stock picking going forward.
How much of the alpha, Gabriela, comes from China?
So China is a really important piece of this puzzle because you can add alpha in Chinese markets, and you can also improve the Sharpe ratio of a portfolio by adding Chinese onshore assets. So both stocks and bonds, we project it for China to have the highest returns over the next decade, double for Chinese A shares versus the U.S., and double for Chinese local currency government bonds versus U.S. Treasuries. So there's a lot of improvement that can happen on returns by adding Chinese assets. And you also get a diversification kicker from those markets. They really beat to their own drum. You're seeing that in action this year.